Howdy out there, folks. It's Darius Dale here to present our macro minute for Tuesday, March 1st, 2022. Starting with markets, we have stocks down this morning, commodities up, crypto up, dollar up, global bond yields down. Big movers, we have WTI crude oil up 4%, Bitcoin up 5%, and then you have double digit declines in interest rates all across the world as investors price in slower central bank policy normalization agendas. So you have the 2 year Treasury yield down 13 basis points, 10 year Treasury yield down 9 basis points. 10-year Boone yield down 16 basis points, 10-year gilt yield down 15 basis points, gilt UK, and 10-year Swiss yield down 10 basis points. So big moves in sovereign bond markets all across the world this morning. On the macro front, the first batch of February manufacturing PMI data were generally confirming of our post-Omicron bounce theme. The lack of a ubiquitous acceleration reminds investors that the transition from the pandemic phase to the endemic phase of the COVID-19 crisis is unlikely to resemble turning on a light switch with respect to global economic output. That suggests any positive rate of change growth impulse are likely to be are likely to be uneven and or potentially non-durable given where we are in the global policy cycle. So accelerating on the accelerating front, we had Australia, China's official manufacturing PMI, its official non-manufacturing PMI, which was also released, accelerated as well. Dutch PMI, Spain, France, and the UK. Italy was unchanged month over month, and then decelerating were Indonesia, Japan, Russia, obviously Ireland, Germany, Eurozone, and Greece. With respect to today's probable range setup, so a lot of pin action in our global macro risk matrix, which features 42 of the most trafficked and most widely followed markets across 12 different asset classes. That allows us to now cash the market regime. So we have the 5 year forward euro inflation swap is overbought, oversold signal in Germany's DAX index, the British pound. And then 1 year, 1 month forward overnight index swap forwards are oversold and priced in US dollar, euro, and British pound terms. So effectively, the markets have priced in a decent amount of policy tightening out of the Fed's, the ECB, and the Bank of England's monetary policy normalization agendas. And as a result of that, you're getting oversold signals in the 10-year Boone yield, 10-year JGB yield, 10-year Swiss yield, 10-year gilt yield, 2-year Treasury yield, 10-year Treasury yield, and 10-year TIPS yield. So again, a lot of pin action bond markets this morning. Looking at the S&P 500, that is still bullish or sort of neutral. Sorry, neutral from the perspective of our volatility adjusted momentum signal with 3.8% downside versus 6.3% of upside. WTI is still neutral with minus 16% of downside versus 3% of upside in its probable range. Bloomberg Dollar Index still bullish. VAMS minus 0.8% of downside versus 1.1% of upside in its probable range. And then taking it to the chart here, we got the 10-year Treasury yield that is blown right through the lower boundary of its probable range. For those of you who are new and those of you obviously who are watching who do pay attention to the program are well aware that our probable range process is quantitatively linked to our volatility adjusted momentum signal. And so this could be a leading indicator that the fact that we're blowing right through the probable range is a leading indicator that we are potentially undergoing a phase transition in nominal interest rates. The levels on that would be 166 on the 10-year from a price perspective, 172 from a 10-year swap rate perspective as it relates to the volatility adjustment factor. In that 30-year Treasury is actually a little bit closer to breaking. 203 is the price signal from a price perspective on the 30-year Treasury, and 184 is the price signal or the volatility signal. If you look at 30-year swap rates, which we use as the volatility adjustment factor for that model. So again, our probable range process does have a fatter left tail if the security's bearish and a fatter right tail, as you can see in the chart here, to the extent the security's bullish, which is why you see 52 basis points of upside. But again, I'd be fading that just given where we are in the global growth and policy cycles. Getting back to the list here, Bitcoin minus 26% of downside. That's also at the upper boundary, or that is at the upper boundary of its probable range there. Ethereum also near the upper boundary of its probable range with only 2% of upside versus 27% of downside. And then lastly, gold neutral VAMs minus 5% of downside versus 1% of upside. So with that, Darius Dale presenting our macro minute for Tuesday, March 1st, 2022. Best of luck out there.